primary market activity happening right now, and one very interesting and very high quality small finance bank is out there for IPO, which you should look at very closely, is Jana Small Finance Bank. And we have Ajay Kanwal right here in our studios to talk more about the IPO and the bank. And of course, last evening what has happened is, if you're tracking the IPO space closely, in the last 6 months, you may have already seen at the pre-IPO level, some of the stalwarts of Indian markets already came in. But last evening, right ahead of the IPO, the anchor book also saw very smart long-term investors. A lot of long-only book has actually been built. 166 crores is what you've raised.
That's right.
I saw very interesting names, some family office guys, as one of the best insurance names. We also saw Coptol, Bandhan, 361, all of them have come in and raised almost 160. How did you form the book? You have high demand, and the book, unfortunately, this anchor is only 166 crore. Were you finding it difficult?
So, yes, we did find it difficult because obviously the demand was like multiple X of what was available.
Sure.
But the idea was really long only. People who really understood the model. And one thing I must say, what influenced also was how many times were they meeting us to understand our model. Because one is to make sure that you make money, but if you're strategic, then you should really be believing in the story. So one of the things that we did use as a criteria was how much did they engage us, how much did they want to understand our model, and then we chose the best answers.
Interesting. That is interesting. You were actually choosing how much to allocate where, which are the kind of investors you would like them to be in your shareholding and cap table.
So, full input from bankers.
Yeah, sure.
Of course, as you know, and you just mentioned, we've got the best of both global and local investors, all marquee names. So we of course took their advice to, understand what would be the right answer for a new addition to the shareholder list. And then, of course...
no, I'm sure it is a consultative approach, and I'm not taking away the role of the banker at all. But yes, I must say that you guys have also, priced the issue at 430 not very sensibly, because in the last 6-8 months, there has been a flurry of activity on primary market. But wherever promoters and managements have priced their offering reasonably, left some value on the table, the goodwill, subsequently when investors make money. But we'll talk about your business model right now at the Small Finance Bank. Talk to us how you are actually taking your business model slightly differentiated than other small finance banks.
So, first going in position really was customer focused bank. Now, customer focused bank means today it doesn't matter whether you are high net worth or you are medium net worth or low net worth. You don't want to go to 4 different institutions and borrow 4 different times. So, a two-wheeler from one place, four-wheeler from one place, deposit another place. Nobody likes that. Now, the question is, does the middle end of India have that bank where they're comfortable to go and say, listen, that's my primary bank, that is my go-to bank, that is my bank of first choice? We felt that yes, there is an opportunity here, let's build that. So that was rule number 1. Rule number 2 was our balance sheet should reflect a customer's balance sheet. Now, if you take any customer, largest loan product in the balance sheet will be home loan. If he's got a home, it will be a LAP, it will be a car loan. So you tend to get secured anyway if you're focusing on customer as your primary answer. So yeah, that took us from a 0%, literally 0% secured to a 58% secured as of September. So that changed the way the book was shaped. And third thing I must say, digital has changed the way banks operate. In the past, I'm talking of when I started banking in the early 90s, we were all worried about small ticket because cost to serve was so expensive. But now with digital, cost to serve is not a big issue, right? So the whole idea why a differentiated bank can be successful is actually become true lot because of digital.
I see that the footprint of Jana across the country I travel, I'm seeing more and more nooks and corners have Jana. But you're saying that the role of technology is also very high. How is technology helping you bring down technology? When I say analytics as well, as we were earlier offline discussing, that you are aiming at increasing the customer engagement so that without raising your cost, number of customers actually go up and higher share of wallet. So how are you doing it?
So I'll tell you something. So I'll give you a simple journey of a housing loan. My staff he's got a mobile phone, he'll input everything, the customer's data. Moment the data is input, it'll go ahead to the credit bureau, get the data, take the same data input in the bank's customized scorecard, which is where analytics come in. So we got a specialized scorecard by product. If it is a yes, entire data moves to the tab of an underwriter. The underwriter will call up the customer, visit the customer, Say it takes 2-3 hours for physical visit, etc. If everything is good by him, he'll press approved. It goes to the centralized underwriter in Bangalore. He'll go through it. If he's got a doubt, he'll call up the underwriter. If he's got more doubt, he'll call up the customer. If he's got even more doubt, he'll do a video PD with the customer. By evening, he'll say yes or no. Now, see in this entire journey, frictionless, no paper.
Sure.
Right? Now, what it does is productivity goes up for all the elements in this. Productivity goes up, so my cost of operation comes down. I'm able to pass it to customers.
So you have high growth also this way, and the profitability also grows very smartly.
And look at customer experience, no? In the morning he talks to us, evening is a yes or a no, right?
Sure.
And then he has to make up his mind whether he likes the price, he likes the loan to value the bank offers, he can make choices. So I think, imagine that we are democratizing credit. For a 10 lakh rupee loan, he gets the same experience a 1 crore loan could have got.
Sure. Okay, let's talk about the secured book, which is actually increasing in proportion, the overall proportion. What is the breakup over there looking like?
So really classically 3 businesses. First is affordable housing. Our average ticket size in affordable housing 12.5 lakhs. So it really means we're working in tier 2, tier 3, people who want to build their first home, small homes. Second is our micro lab book. These are, I have a shop, I want to buy the next door shop to increase my business. So micro lab, average ticket size 9.5 lakhs. Then we have MSME, which is small and medium enterprise, where our average ticket size is 34 lakhs. All 3 are backed by property. Largely residential, of course in MSME commercial too. And that's our primary 3 businesses. We of course have our inherited core business of
which
microfinance.
running down.
Yeah, which is, I mean, what we are doing with microfinance is, see, we are trying to make sure that the growth rate is at a single digit, while the secured growth rate is high 30s and 40s.
So as it is, I mean, the relevance will actually automatically go down than, of course, running down a business.
See, we have today 49 lakh customers.
Yeah, wow.
Total database of customers we have served is 1.2 crores. So our idea first is the customers we have, let's become very relevant for them. Just adding customers by itself may not be the best answer for them and for us.
So you are of course in the silent period, cannot give guidance, but I want to understand, looking at your past 5-7 years of growth, where of course both base has also come higher. Leave us with your thoughts on the sustainability of the growth which we have seen at your organization.
So, you know, one thing you will see in the numbers, it's a bit of, I call it the way Pareto principle works. You do 80% of work, you get 20% result. The last 20% gives you 80% result. We are in that last 20%.
Interesting.
Which is why you will very interestingly see such a sea change. Honestly, we could have got this 80% change even earlier, but COVID postponed it.
Sure.
But now we are seeing all the hard work put in I must give credit to the team. Super hard work in the last 5.5 years. And you're seeing some fabulous results, but very sustainable because it is retail growth. It is good NIMs. It is good. Our NPA now is 0.9% net NPA.
Lowest in the class.
Yeah, I mean, I would sit here and very comfortably say that what we have as results and what we have built as model is a very sustainable answer.
So if you get it, the hint is that only 20% of efforts will give 80% of the results going forward, because so much of work has already been done. So watch out for that one. Pull up the valuation plate once again. The offering, as per our estimates, is 1.3 time forward price to book at 414, compared to many others, anywhere between 1.8 to even above 2. That's the other IPO also on the block, but look at this one, 1.3 times. Thank you very much, Ajay,
Thank you
dropping by, and good luck for your IPO.
Thank you.